Is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading, and we got higher prices across the board coming into the opening bell. We got the S&Ps right now up about 19 points. You put the S&P on a daily chart, we're bumping right up to the highs we had. Those highs, July 14th. We're talking about 9 days ago, and we're within about 7 points of that high, folks. We made it up to 43.83, so within about a point and a half of all-time highs on the S&P right now. You back it up to the NASDAQ 100, all-time highs. Earlier in the morning, 15,015 on the NASDAQ 100. We're within about 45 points of that level right now. We're positive by 0.3% in the NASDAQ 100. The Dow up 183 points. So the Dow is only 110 points away from all-time highs. I mean, we could get a Dow, NASDAQ, and S&P ending the week on all-time highs, all three of them, after quite the acceleration we had, we all know, earlier in the week, Monday's lows. The Russell, not quite there yet. 2206. The Russell would need quite a day. Not sure we'll get there today no matter what happens, because you're a solid 160 points about from the all-time highs in the Russell. Still, you're talking about 100 points off of the lows that we had earlier this week. The Russell made it down to 2100 on the dot. Bitcoin got a little bit dicey earlier in the week as well. 30,000 looks to be a battle point in Bitcoin. One of these areas that you don't have to be a genius chartist to figure out where the support lies. This area, support back in January, the first initial acceleration to lower prices, right, really started May 10th. May 10th, 59,900. You had a print. By May 19th, you basically almost got a 29 handle. From 59,000 down to 30,000 over a period of 9 days. My goodness. Somehow Bitcoin finds a bid at about 30,000. We make it back down right near that level June 8th. We make it down to that level on June 22nd. Now we've made it down to that level again today. Now, the only thing that is not too kind to the bulls here is that, man, these bounces are getting more shallow and more shallow, right? You look at the bounce we had late June. You look at the bounce we just had here. Where we go from here, anybody's guess, folks, but you want to see some strength in Bitcoin here out of 30,000 if this thing really has some legs to the upside. Not sure that's the case. Let's jump over to Coinbase real quick, see how they're trading. Coinbase trading about 226. They go IPO on the day that Bitcoin makes its high, 429.54. We're a long way from there. Coinbase, still, I mean, you're talking about a company valued at $50-60 billion. Not too bad. All right, jumping back to the markets, to commodities. Crude, quite a week for crude. You check out the run we had from November on a daily basis. It was a straight shot upward to $77. I mean, folks, if you even just got a 382 retracement, that would bring you back to about $60 in crude. Not sure we're going to get there, because that was quite a bounce in crude recently. We were just down to $65, and just like that, we're going to end the week above 71, it looks like. Gold contracts, some volatility today as well. Now, gold, you back it up to the run it had since the beginning of April. You go from a price point about $16.75 up to $19.15. We take back a 618 of that. Bounce around from late June. We take off basically June 30th, and we may pull back again. 1775, maybe 1768. That's going to be a critical area for gold as it held that area at the end of last month. And let's jump over to the note and bond market, because you want to talk about some volatility, folks. These moves don't look as ridiculous as they are. I say ridiculous, as extravagant might be a better word. But you go from 133.14 last Friday. You trade up 7 ticks shy of 2 full points by Tuesday, right? What do we have for a yield that day? I think we were pushing like 1.12, something like that. And just like that, we've given up a full point. So you get almost 2 full points up and more than a full point back down. And just like that, we're only looking at a 5-day chart, folks. 5 days of trading in the 10-year. You back it up on a 3-year weekly, okay? Quite a run that the 10-year had. From 2018, we make a high at the doldrums of COVID in terms of a spike high. That's when yields were just crashing to zero. 140.24. Now, this area that we bounced in, you're talking about an area of about 131.24. We're pretty decently off that right now. You're more than 2 full points off of that level. That level correlating to a 382. We bounced around there, but basically from almost February to where we accelerated higher at the beginning of July. That area was also an area of resistance, backing it up to September 2019. Looks to be an area of support now, and we'll see where we go from here. But quite the acceleration, but we've given it back too. I mean, look at that bar on a daily basis, right? Quite a tail to the upside as we spike to 135.07. And we're going to end the week at 134.02. I say end the week. We still got some trading left. I mean, what do we got to get to go negative here on that bar? You're talking about 133.26. That bar could turn red. That would be quite a tail indeed. All right, let's jump over to the VIX. Volatility index this morning. The VIX on a short-term basis, 1709, rightfully so, as this market just continues higher. Now, interesting, next week, we got a Fed decision. And we get the biggest companies in the world reporting earnings. So you're coming into basically the biggest week of earnings out there. The tech stocks have been driving this market forward. They have to put up their numbers or they're going to pay the penalty. And, man, they got to put up some big numbers because they're valued at some big numbers in a big way. And you're coming into that week at a low volatility index yet again. We'll see where that shakes out. Now, let's jump over to some of the companies with their numbers. Snapchat, absolutely crushing it. Now, check out Snapchat. We're going to be jumping up to the highs on the open on Snapchat. All-time highs on Snapchat. I believe that's all-time highs. Let's back it up. Yes, it sure is. Look at this chart. My goodness. Remember when Snapchat, I mean, sometimes, folks, this was a great buy. For people who understood that Snapchat wasn't going away, it's a bet, okay? It's a probability wager. But in my opinion, Snapchat was not a fading social platform at the time that you had this thing crash into $4.82. Okay, yes, they were struggling immensely to make money. Yes, it was a wager that could lose money in terms of if you bought this thing. But it was also still pretty prevalent among the younger crowd in terms of Snapchat. Now, they've really turned things around since the lows of COVID. Everybody, every single business in the world is spending all the money they can on online advertising, right? Whether it's Facebook, whether it's Google, whether it's Snapchat, and whether it's Twitter as well. But we're going to open. We got a bid right now, right at the all-time highs of 73.59, backing it up to the daily. We made that high in February. We've been chopping around between about 50 and 70 since then, and we're going to open right near the all-time highs on Snapchat. And getting into their numbers in terms of Snapchat, some big numbers in a big way. Is this the one? Where am I? Here we go. So it says they popped. How about they have a net loss? The revenue was just staggering. So they have 293 million daily active users. That's up 5% of what they reported just in April. I mean, that's staggering. They added 13 million daily active users since April. Not sure who's just coming onto the Snapchat platform. Maybe it's internationally. Look at the revenue. 982 million versus 846 they were looking for. We talked about the daily active. Average revenue per user, percentage-wise, that's through the roof. I mean, what is that? That's 43 cents above a 30. It's almost like a 15% beat in terms of the amount of money they're earning per user. And they got 3 million extra users than what they were thinking. Snap said the company was not impacted by iOS 14.5 privacy changes, as it had anticipated that it would be. This was due to the mobile operating system update rolling out later than expected. So expect that might be in the next quarter coming out, but nonetheless, big numbers. We're going to talk a little bit more about Snapchat when we come back. We're going to talk about Twitter, too. Twitter up to about $72, it looks like, and we are going to get into Sam Adams because, my goodness, if you bought the high at $13.50, folks, you're almost going to get half. We're going to open at $7.45 on Snapchat. That's going to be pushing the lows on this chart. Stay tuned, folks. We'll be right back after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&Ps up about 20 points right now. We're approaching all-time highs, trading at 43.78. I got a chart here of a daily of the S&P, pretty well-defined channel to the upward side. You're talking about on the lower boundary line. We touched that level coming into the action on Monday, and we bounced in pretty dramatic fashion. Same thing that happened in June, okay, and we were right down in that level in May as well. Pretty well-defined indeed, and if we make it to the top side of this, you're talking about 4,500, folks. Either way, well-defined, and we're stuck in that channel line. Anytime we're touching the bottom or the top of that thing, I would be looking at buying or selling that S&P until it proves otherwise. All right, so jumping back to some of the companies with the numbers. Snapchat, as I said, we're going to open basically now just bidding just above all-time highs on Snapchat at 73.59. Getting into the numbers, we talked about daily active users. How about year-over-year revenue growth of 58 to 60% for the third quarter? That's down compared to the 116 annualized, but things are a little bit weird when you talk about analyzed, right? And they're looking for 301 million daily active users in the third quarter. And just it's staggering growth in a big way. Interesting, they weren't hit by iOS 14.5, the privacy one that's rolled out later. And as they said, because this is going to be an interesting one on Facebook dramatically as well, iOS users being slow to update their devices and Snap observing higher opt-in rates than we are seeing reported generally across the industry, which we believe is due in part to the trust our community has in our products and our business. That's Snap's Chief Business Officer, Jeremy Gorman, saying, prepared remarks. This has given us more time with advertisers to navigate the transition, but also means the effects of the changes will come later. The effects are coming. Do you hear that, folks? They're coming. They're just coming later. And I would question this statement I would question it tremendously. Higher opt-in rates mean that everybody just trusts Snapchat. Folks, I don't see this trend continuing in any way. If you have to opt in to being tracked by anything, I imagine it's just a race to not happening. If Snapchat really thinks that they're just going to have people trust them over other companies, now, hey, if you're competing with Facebook, nobody trusts Facebook, right? I'm exaggerating, but Mark Zuckerberg, rightfully so, with his history and what's going on over at that company, I don't trust him. And they'd probably be the quickest one I'd say no way to. Maybe people are a little bit more open to Snapchat. I don't buy that one as well. They're probably seeing it, but whether that continues, I mean, they're saying here then only a small number had that update. So really, the tide is coming. The wave is coming in terms of the amount of people that are going to have the iOS update. They're going to get prompted and said, you want Snapchat to track what you're doing. Nonetheless, they're just going in dramatic fashion. The revenue is just gangbusters. The amount of money these companies are taking in for advertising as we just live on mobile phones is staggering. And you got Twitter's going to open about a couple bucks up, nothing too dramatic like Snapchat. You see the volatility they had up to 76.70. We've given back a lot of those gains. You're still up by about $2. Now Twitter, in terms of their numbers, fastest revenue growth since 2014, accelerated and surpassed the expectations. They have a subscription service in the quarter. Boy, you really got to be a Twitter fan if you're subscribing. 20 cents a share versus 7 expected. Revenue $1.19 billion versus 1.07. I mean, these are staggering numbers when you look at them. I'm always amazed how some of these public companies, I mean, if this is a private company, you are just raking it in. Percentage-wise, revenue, that's an extra $120 million over 90 days, folks. Okay? That's $1.33 million every single day for the whole quarter that they took in extra than what they were thinking. And on a percentage basis, you're talking about an 11% bump over the expected revenue on a 90-day period. Now, monetizable daily active users, little bit of a miss. I mean, these companies, it's number one, it's about how much money you're taking in and making to the bottom line, of course, like any company is. But if you get the users, the money will follow, right? To some degree. Twitter's had a hard time monetizing their daily active users, but now when you want to see missing, probably why Twitter shares are curtailing some of the gain they had. Yeah, you're growing revenue growth, but you miss on the daily active users at a time when Snapchat is really adding and beating the numbers that they had expected. Revenue grew 74% year over year, though. Staggering numbers. A broad increase in advertiser demand. In the prior quarter, revenue had risen just 28%. Growth accelerated. The company lapped a quarter when revenue declined. Yeah, they're comparing it to last year, of course. First subscription service gives users access to an undo tweet button and other features. Not sure that's going to be a dramatic moneymaker for them in the big way. The company also released its Spaces audio chat feature on mobile devices for all users with at least 600 followers. They got a bunch of different features on there, but nonetheless, they are trading higher today. And as I mentioned, Sam Adams, watch out for this one, folks. Excuse me. So now they are getting downgrades, probably rightfully so across the board. I was trying to pull up, and I'm going to try and pull them up even at the next break, because the amount of revenue that this company, Sam Adams now, great company, they got some great beer, a little bit biased from the hometown Boston Beer Company, but the revenue that they're taking in from the hard seltzer brand they have, Truly, and the percentage of that revenue in terms of comparing that to the amount of beer they sell, and then comparing how this company was valued for the growth of that company, okay, they're taking quite a hit this morning. Now, you jump over to the Analyze tab. We're talking about a company, about $9 billion market cap, but they're going to lose about $1 billion to $2 billion market cap on the open. That's a substantial loss, and you back it up to a 3-year weekly, all right, you're talking about $740 right now, which is basically you're bringing it all the way back to a year ago earnings. You're going to back it up, and we are in the middle of a run, folks. I mean, you're probably going to head to the bottom of this bar then. That's a weekly bar when we traded from 641 to 828. If you're going to open right in the middle of that bar, it's anybody's guess whether you jump back to the top of the 800 range or you just drift back down to 400. Their numbers, though, you get into it, Sam Adams. Truly hard seltzer sales. That's a tongue twister. Truly hard seltzer sales weigh on earnings is the headline. And yeah, to put it lightly, second quarter earnings and revenue fell short of expectations. Now, what's so interesting here is they had just guided upwards. Okay, like I think it was last quarter, they guided up to $22 to $26 a share. And then they had to revise it to 18 to 22, which is actually less than it was at before they guided up last quarter to 22, 26. And they said they basically overestimated. Yeah, there you go. We overestimated the growth of the hard seltzer category in the second quarter and the demand for Truly, which negatively impacted our volume and earnings for the quarter and our estimates for the remainder of the year. CEO Dave Berwick said in a statement, well, Dave, careful the type of expectations you put out there, because like they usually say, it is better to underpromise and overdeliver. And man, as a public company, the last thing you want to do is get ahead of yourself and crush that one out there in terms of saying that you're going to crush it out of the park on your estimates. And guess what? It just doesn't happen. I'd much rather keep things in a little bit more of a realistic nature and beat on a continual basis than having to do something like a dramatic turnaround. But they're in a very volatile business. Competition's really heating up in a big way, but you're seeing downgrades across the board. Still some lofty numbers across. So like Credit Suisse, they lowered their price target to $12.81 from $14.90. Okay, that's a pretty staggering number when you look at the chart and where we are. Jefferies adjusts the target to $6.85 from $7.60. Looks to be a little bit more line in reality. Morgan Stanley, they cut it to $9.90 from $14.50. There were some lofty numbers here. There's still some lofty numbers, but you're getting downgrades, and in a big way, as truly hard seltzer. That's where the growth was, and they're struggling for Sam Adams. Stay tuned, folks. We're coming back with the open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ADCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got taking a look at Sam Adams dropping even from where we were pre-market. You're down 23.5% right now. Staggering numbers. My dad's out there. Good morning, Dad. Sending me some information on good old Sam Adams. Strong numbers, right? I mean, you're taking in $2.4 billion. You're taking in $600 million in terms of the numbers that they're talking about on a quarterly basis. They get some strong earnings to back it up as well, but the growth side of things, not what the market was pricing in if you back it up. to just a quarter ago in April. In April is when they guided upwards in terms of the number that they were talking about. They pushed it to $22 to $26 for earnings, and they had to bring that right back down to 18 to 22. Before they got it up, they were at 20 to 24. That's a big miss on management side. You can't make that type of a leap and then fail over the period of 90 days, right? They were in the ballpark, I believe it was $20 to $24 for earnings. They upped it to 22 to 26, and now they're saying, hey, guess what? We aren't even going to make the numbers that we had last quarter that we upgraded from. We're going to be below that from 18 to 22. Now, some of the numbers in there as well. He's got a couple screenshots from the Bloomberg. He sent it over here. And this one's a critical factor here in terms of talking about shipments and depletions of 25 to 40% versus 40 to 50%. And shipments, depletions, how fast they're getting the product out of the warehouses, not the number you want to see. They had 48% last quarter. I think they're at like 24% this quarter in a big way. And it's all about the hard seltzer growth. It's a tough segment of the industry to be in. So much competition. Seems like everybody's got a brand that they're pushing into the hard seltzer. Truly's a big one out there in a big way, but they're suffering. Let's jump over to the other companies with their numbers. Snapchat continuing the run, man. Look at this. Snapchat up almost 20%. We'll jump to Twitter shares. Twitter shares giving it back a little bit, but still up about 2%. Oh, look at that, dropping off. Daily active users. You're not growing your user base in terms of what the market was expecting. Looks like a little bit of a penalty for Twitter. I say penalty as in strong numbers. Biggest revenue growth they've had since 2014. Just missed it on expectations for daily active monetizable users, whatever that categorization is. You're up 1.5% on Twitter shares. All right, let's jump around and see what else we have going on in the market in terms of stocks making moves. We got a bunch of companies out with their earnings. American Express. They were higher pre-market, $2.80 a share. Market was only looking for $1.66. This has to do with the release of credit reserves, putting a lift into those earnings. Always surprising, too. It's like, don't the analysts realize that there's going to be some reserves? They're going to be lifted in terms of, I guess that's a variable number that's tough to peg because you're coming in at $1.66. They make it to $2.80. It has to do with the reserves being increased. And increased spending on travel and entertainment, of course, but American Express, you're up by about 2.7%. Quite the acceleration. You're talking about, is that all-time highs? It might be. There it is, all-time highs for American Express on the open at 176.23 trading right now. Let's jump around to some of the other Visa, how we trade. Visa positive probably on that news as well. Honeywell out with their numbers. They beat by 8 cents. It's a decent quarterly earnings season so far, folks. Sam Adams not making the grade, but a lot of companies are right now, as you're seeing. Honeywell, they beat by 8 cents. Revenue beats as well. Saw growth across all its businesses. Got a boost from a rebound in areas hardest hit by the pandemic, such as commercial aerospace. Not bad, Honeywell. I think that's HON is their symbol. There you go. Actually giving it back a bit, down 1.7% on strong numbers, though. Schlumberger. The oil services, right? Yeah, oil services, oil field services. Top and bottom line beat, 4 cents above estimates. SLB. There we go. Up about 1.1%, and they should have a beat with the way oil has been trading. And we talked about Twitter. Intel. Here we go. Intel. $1.28 versus $1.06. The interesting thing here that I wanted to talk about, folks, on Intel. Let's see how they're trading. Okay, quite the spike last night. You open, you trade a little bit lower, backing things up to, look at this volatility. Let's put it on a 5-year weekly. Quite the trading range from 45, the upper boundary at about 60. We've gotten above, maybe you could call it 69 on the upside. And remember, it's crazy. Excuse me, you think about the run this thing has had. I think they got a new CEO in here, right? All the optimism trades this thing up to almost $70. And just like that, folks, we give back 25% in this equity. We're trading at 53.54. Now, here's the line that caught my ear this morning on Intel. How about a forecast that disappointed investors and said that the global chip shortage could last well into 2023? You're talking about more than 2 years from now, possibly, that chip shortage could persist. Boy, my brain tries to wrap its head around that one and says, how is that going to impact other areas like, for instance, the automakers, right? If we're dealing with chip shortages for the next 24 months, watch out. It's going to have some ramifications in a big way, folks. Surprising to hear that in terms of it's that much lag time to catch up with the global chip shortage, but every single thing we use is going to need a microchip soon, folks. It's going to be the Internet of Things, right? Every single thing is going to have some type of a microchip in it to talk to 5G, etc. 2023, though, that kind of not hearing a lot of companies talk about maybe 2 to 3 years more. I mean, right? You talk about the automakers, they're saying, yeah, it should work itself out in maybe the next year, etc. We'll see what happens there. Skechers out with their numbers. Surged past the 52-cent estimate. They come in at 88 cents. The footwear maker posting better than expected revenue. Workers returning to offices boosted demand for its comfort technology offerings. Skechers. What are they? SKX? SKX. There we go. There's a pop for you, up 4.5%. That's a bullish engulfing on a weekly basis. You're going to encompass this entire back area through April. Look at that, folks. That is a bullish engulfing in a big way as this thing. Now let's jump over to the Analyze tab. You're talking about Skechers. You're talking about a company at about $8.3 billion right now. Is this an all-time high? I believe it might be. Oh, look at that. We're right up to there. All-time high, 54.53. And we just made a high today of 54.31, bumping up to that level on Skechers shares. Back to a 15-minute. Yeah, strong numbers out of the gate last night. We've given back some of it. So we did get above that level pre-market, just couldn't hold on to those gains by the open. Mike went mute. Excuse me. Not sure how that happened. Okay. I'll start again. We get the Dow 34,950 is a high, 50 points away from all-time highs. We'll jump over to Amazon. Amazon, quite a strong day yesterday. I think you're up 1.5% yesterday, giving back some of those gains today, down about 0.1%. We got Apple shares positive by 0.2%. We're going to get some big earnings next week as we get all the big FANG stocks. Microsoft shares up about 0.4%. Netflix shares, after coming out with their numbers earlier this week, trading towards the lower end of where it's been at. About 509, it seems, where Netflix has been comfortable. Let's jump over to their competitor, Disney, pulling back this week as well. We'll jump around to some of the other streaming stocks. Discovery, down about 1.2. I say streaming. Comcast, up about 0.5%. And we got the Olympics happening today. Opening ceremonies going on this morning. I was checking it out a little bit. Always enjoy some good competition. You got to love good competition. There's no better reality television, folks, than live sports, in my opinion, because the raw emotion, you got people putting 4 years of work. You got people putting a lifetime of work. For some of these events, that 100-meter dash, you're talking about a lifetime of work for 9 seconds of performance. And man, the emotions that go into that type of work, I love it. So hopefully everybody just in the kind of sportsmanship. Great Olympics coming up. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps, all the markets kind of holding right where we lifted off on the open. We're trading up 17 points right now in the S&Ps at 43.76. Interesting article over here on Bloomberg. We all know the run commodities have had recently. Man, for some of those traders out there, some big monies. Oil giant Vitol, maybe, hands record $2.9 billion payout to its traders. So this is a private company. It's the world's largest independent oil trading house. Has oil had some volatility this year, folks? Has it? Yes, it sure has. How about a record $2.9 billion to its executives and staff through share buybacks so far this year after the world's largest independent oil trader notched up its best ever result in 2020. So this is a private company. The share buybacks are a way of rewarding about the top 350 employees of this company, which is privately held. So the trading house has distributed a total of nearly $19 billion in the past 17 years. They basically have partners. You make it to partner, and you're a owner, and they give share buybacks as a way of distributing their earnings. And as Bloomberg puts it, just staggering numbers. The results highlight the bonanza enjoyed by commodity traders in the midst of the coronavirus pandemic as oil prices gyrated wildly. I would say so. They also show how the riches of the commodities trading industry have accrued to the small cadre of senior executives who have surfed the ups and downs of the energy markets over the past 2 decades. We got the yellow in terms of share buyback to date. You got the share buybacks in pink, net profits in black. They're basically just giving out their earnings to the owners of the company. Nothing too surprising there. That number is $8 million basically per partner. Just remarkable. Some of the companies, talking about billions of dollars, folks, and the type of volatility we've seen when these things went really bananas. And they talked about even in here. Yeah, so Vitol made a significant chunk of its products during the second quarter when demand collapsed, allowing traders to buy cheap crude and store it while locking in a profit by selling forward the oil on a futures market at higher prices. It's a different kind of trading when you're in this world, folks, all right? This is not people who are, just merely looking at a chart and buying and selling and catching. They are playing games here with vast levels of money that allow for literally, whether it's a contango, whether they're storing these numbers. Remember, folks, we had oil at negative prices last April. Negative. Man, the amount of money that was made in some of those stories that were made, just staggering, and you're seeing it here in a big way. Another article out there in Bloomberg talking about the Fed. Watch out for this one, seeing tapering of mortgage-backed securities in early 2022. So this is a survey of economists. Most in the survey continued to see Powell renominated. That seems to be the consensus out there. Economists expect more hikes through 2024 as inflation rises. But, if you start seeing that tapering in the early part of next year, watch out. market might be a little bit dicey there, especially. We'll see where the cases persist at that time. We'll see where the economy is at that time. If they start tapering, we still got millions of jobs to make up. We'll find out. But guess what, folks? We're in earnings season. Earnings season going pretty well right now, all things considered. Yeah, how about Shopify this morning? They're talking about it over in the YouTube Tigers Den. This is a daily going back 5 years. Let's zoom it back in on just the last year. Let's just zoom it in this week. How about Shopify? Is that Monday? That is Monday. Shopify from 1,400 to over 1,600. This thing making new all-time highs. TFNN, we use Shopify. Great platform. You can see why they've been so successful. You jump over to the Analyze tab. Come on, cooperate. They're moving too fast. I mean, it's just a mammoth company at this point for Shopify, trading to near. No, not near. That's an all-time high, I believe. It sure is, to the upside. We're at 400 in the lows of COVID about. Really, we're down to 305, actually. It looks like 400. This chart is so out of whack. And we're trading at 16.17 right now for Shopify shares. That, I'm guessing, an extra lift, probably maybe having to do with American Express, maybe having to do with Visa, the numbers. I mean, Shopify makes money if the internet makes money because they get so many charges that they're running. If people are spending more money out there, they're going to make more money. And they're trading higher all this week from 13.93. All right, what else we got going on in terms of what we see happening in the market? We talked about Sam Adams. Yeah, focusing back on China yet again. Another group of U.S.-listed China stocks are plunging as Beijing regulators crack down. This one's, check it out. Education shares falling 55% in extended early hours trading. You have a number of the companies, really. Educational training institutions are banned from raising money through stock listings, while foreign capital cannot invest, according to a copy of a new policy document seen by CNBC. Excuse me. So what they're basically doing is you have two U.S.-listed Chinese education stocks plunging in pre-market trading, all right? And the report comes as China stepped up restrictions in recent months on private education industry. They're basically going to say they have to be nonprofits. I'm trying to find the exact wording here. So they're banned from raising money through stock listings. Foreign capital can't invest. One of the bans on foreign investment included variable interest entities. I'm trying to get into it where they say it. Yeah, I would be very skeptical, end of story, folks, of investing in anything, right? I was talking to Kevin Hincks yesterday. I wouldn't be touching it. He wouldn't be touching it. I mean, there's risks in everything that we trade, folks, and doesn't mean that you can't make money in some of those companies. But, boy, you're playing with risks that I don't think you can quantify because from the time that we were talking to Kevin Hincks yesterday, folks, Diddy, just one of the companies, right? My show's from 9 till 10, okay? Yesterday, Diddy was trading about 1060. You just lost almost 20% overnight in that company of where you were trading at yesterday. This pain is not over, okay? Things are changing dramatically in front of our faces. Alibaba yesterday when I was chatting with Kevin Hincks, we were at about 214. Yeah, we're down another 5% basically from there. You're down 4% on the session right now to 205.59. I mean, you're seeing a clampdown of a communist dictator over in China. He's grabbing power from anybody that's got enough money to get in his way, and he's making sure nobody is going to get too big that they lose control of the people in China. That's not what you want to see if you're going to be an investor in one of these companies, because they ain't going to let anybody get too big for their own right, and they're not going to have any of these owners getting too big where they can't smack them down. Jack Ma, I mean, can you imagine the conversations that had to take place behind closed doors to have Jack Ma basically just stop coming out in public? What was put in those conversations, folks? Think about that he's basically ceased to be a public figure after the public life that he lived. Pretty dramatic words, I imagine, were said. I wonder what the threats that were out there were put in place, but nonetheless, you can do the math on that yourself, and I imagine pretty staggering. And the slide just continues. I mean, Diddy is the best example in terms of, you push this thing just to push it back to the IPO at 1801. And just like that, you buying this thing on margin, you lost your entire investment, folks, just like that, let alone this thing sputtered around at about 12 for a while. And just like that, we're down to 860. So buyer beware in a big way over there in China because the game has changed probably forever in some of those companies. They're going to try and get them to list over in Hong Kong as they take over Hong Kong as well. All right. And what else we got? We got the Olympics coming up. Should be an interesting couple of weeks. Love watching the Olympics. Love some good competition, as I mentioned. People just putting their heart and their work ethic on the line. And always love to see that, some good competition. And as we come into it, we get the markets right near all-time highs. This is an hourly chart. We're trading at 43.77, just up near the all-time highs. Haven't quite got there just yet. We're trading at 43.77. Crude market hanging tough at about 71.60. We got gold down a bit, 17.99. Checking in on notes and bonds right now. The 10-year negative by about 5 ticks. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now up by about 17. The Dow giving back some of the gains. We're up by 121 points, but we had been up to a high of about 34,950. Yeah, so the Dow gives back about 120 points. Actually got the Russell going negative right now by about 6 points. Putting it on a short-term basis, you see the drop-off we had on the Russell. You're down about 22 points, a full percent just since the open. Everything a little volatile, but NASDAQ 100, we did it trade lower. We're catching a little bit of a bounce at 14,978, and the S&P right near all-time highs as well. All right, checking in. So next week, we really get the main events for earnings. Now, Microsoft, I believe that's an all-time high on Microsoft right there. Is it? It sure is. We're getting all-time highs across the board. Microsoft just been super, super strong. Jumping over to the Analyze tab, you jump over to the Earnings sub tab. You're talking about Microsoft. They're out with their numbers on Tuesday. I believe we get Tesla on Monday. Is that correct? That is correct. So we get Tesla on Monday, Microsoft on Tuesday, Facebook on Wednesday. I think we got Google on Tuesday as well. So Microsoft and Google on Tuesday. Okay, and then we get Amazon, AMZN, on Thursday. So quite a week in a big way. All those tech stocks coming out with their numbers. We'll see where they shake out. Jumping over to Facebook on the heels of those strong numbers from Snapchat. Look at that pop. We're up another 2.7% for Facebook shares. You take a look at the daily this thing has had. We're making all-time highs today. We were just trading at $260 on March 8th. How about adding $100? That's about a 40% pop in the price of Facebook shares from where we were trading on March 8th. You see their earnings number. Interesting action when they came out with the earnings in April. We did spike to that high. We gave it all back, closed the gap, and from there you take off from 300. We're up at 20%. We're up 20% just over in the last about 9 weeks on Facebook shares as well. And as we wrap it up, let's check in on some of those companies with earnings. Man, Sam Adams, you're talking about continuing to slide down 25.7%. On the flip side of that, Snapchat up 21%. Twitter shares up 1.1%. American Express shares up about 0.25% on their numbers as well. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up live next. Folks, if you haven't checked out Basil's webinar, okay, he's got his multi-day webinar going on. The second one's coming up this Wednesday, okay? You can still attend that. It's a 6.5-hour archive from the live webinar he did last week. Okay, that's under the services tab, multi-day webinar. Check it out as we get ready for Basil coming up live now. Live programming, all market day at TFNN. We'll be right back, folks. Have a great Friday.
Building wealth